Okay, everyone, welcome to Lead Generation Week Day numero cuatro, number four. Welcome. We've got a really great day scheduled for today. And of course, we've got an awesome session here that we're going to kick off day number four with. I want to first thank our sponsors that have helped us make this all happen, Leadspedia, Drips, and Fluent. We really, really appreciate your support and certainly appreciate everybody that's participating in the exhibit area with your directory listings, and then of course all the speakers and attendees. And this is obviously a community event, and it takes everyone to be a part of the community and support it. And so thank you all for doing that. I want to go ahead and get started in just a moment, but as usual, I do want to just make a few notes as how to participate in all these sessions, and specifically this one. First off, we definitely want you to participate. When you ask questions, we really get so much more out of the session, not just you, but everybody. So don't hesitate to ask questions, and you can do that two different ways. You can do it in the mobile app or your desktop app there. There's a little session Q&A to the right there. You can type those questions in, and then we'll make sure that the panelists and presenters see it. Or there's a little icon, a Q&A icon on the video, and you can ask the questions right in there, and it'll go right into Zoom. So either way, whatever's convenient for you, you can type those questions in, and we'll make sure that they get answered. But certainly ask questions. And so without any further ado, we've got a great panel here and a great session. The topic is Opportunities Abound, but Challenges Lurk. And we've got our moderator, Jamie Pickles, who is the General Manager of Insurance for Jornaya with us. And Jamie, I'll let you take it from here and then introduce the rest of the group.
Terrific. Michael, thanks so much. Really appreciate it. And always thank you for giving insurance the stage during your events. It's really important. And we as an insurance community really appreciate that. So good morning, everybody. And thank you very much for joining the session. As Michael said, I'm Jamie Pickles, the GM of insurance at Jornaya, which is a consumer journey insights company that helps our customers deliver a better customer experience and mitigate compliance risk. So this morning we're going to be talking about, as Michael said, the opportunities and challenges that we have been facing and will face going forward in the personal lines insurance space, and how the circumstances in the past 10 weeks have clearly accelerated the reliance on the industry's digital capabilities, likely advancing it more in the past 2.5 months than it may have in the past 20 years. I'm excited today because I'm joined by 4 experts in the personal lines, P&C, life, and health lines of business. We have Eric Josowitz, from Senior Vice President from All Web Leads, Ryan Hempker, Strategic Partnerships from Liberty Mutual Insurance, Jose Vargas, co-founder and president of healthcare.com, and Anil Coker, who is the Chief Marketing and Sales Officer at iptiQ by Swiss Re. Gentlemen, thanks so much for joining. So let's start with, if you don't mind, let's go around, and if you don't mind, please introduce yourself, discuss kind of your role at your company, and maybe mention something that you're excited about for the remainder of 2020. Eric, let's start with you.
Good morning. Thanks, Jamie, and good morning to everyone. So I'm Eric Josowitz. I'm the SVP of Technology at All Web Leads. So my role is I'm responsible for our software development, online operations, business intelligence, and product management for AWL. We operate across all insurance verticals, and we focus on contacting consumers who are looking for insurance products and connecting them with the right agent, agency, or carrier. I'm also the president of the Leads Council. As far as what I'm excited about for the remainder of 2020, I would say it's kind of the other side to the coin that we find ourselves in right now. So the accelerated adoption of all of these cloud collaboration tools. I'm excited about that and seeing what that leads to. I think that good things are happening as we're finding new ways to collaborate with our coworkers and business partners.
Great, thanks very much, Eric. Ryan.
Yeah, thanks, Jamie, and thanks for everyone who has joined here today. So I'm Ryan Hemker. I am the segment manager at Liberty Mutual Insurance in our strategic partnerships group. I'm responsible for managing our pay-for-performance marketing programs, primarily supporting our direct sales centers. For those of you unfamiliar with Liberty Mutual Insurance, we're a global omni-channel company based in Boston, primarily focused on property and casualty and commercial insurance lines of business. We've been in business since 1912. What I'm most excited about this year is the innovation that will likely be spawned from the challenges that are presented to us at present.
Great, thanks. Jose.
Hey, thanks, Jamie and everybody. I'm Jose Vargas. I'm the co-founder of healthcare.com. I run business development and strategy for the company. We have three legs of our business. One is the recommendation engine or comparison tool for health insurance and Medicare plans. We also own our proprietary Medicare portfolio proprietary products called under the brand Pivot Health. And we also started a agency in Indianapolis to be able to serve especially the Medicare markets. Thanks for having me.
Great, thanks, Jose. Niels.
Yeah, thanks, Jamie, and good morning, everybody. My name is Anil Coker. I'm the Chief Marketing and Sales Officer at iptiQ. iptiQ, probably not a familiar household brand to many, so a couple of words on our company. We are a subsidiary of Swiss Re, one of the largest global reinsurance companies in the world. And iptiQ has been around for 4 years now in the United States as the insurance arm of Swiss Re. So we really are focused on bringing mainly life and health insurance solutions, products, and technology for the middle market, as we see a big underpenetration in those lines for that specific target audience. So in my role, I'm responsible for the business development, the partnerships we form with distributors and with the carriers, and the management of those accounts and the marketing and branding around that. Very excited about the session, but also about what COVID is accelerating. The life insurance industry has clearly been lagging some of the other lines that are represented here today, and I think this could be our moment to catch up.
Very good. Thanks, everybody. Appreciate that. All good stuff and great things to be excited about. I've got a whole laundry list of questions here, and I know the audience will have some too, and we'll get into those in a second. But before we do that, I wanted to share one slide with everybody to kind of set the stage for kind of what we've been seeing in the from a consumer behavior perspective over the past 10 weeks. And what I'm going to display here is by line of business, the change in the number of unique shoppers that Jornaya has witnessed on comparison shopping sites over this time frame. Break it out by line of business, so auto, home, life, and then health. I'm using the week of March 2nd, which is Monday, that week as kind of the baseline. So every kind of change over the course of the subsequent weeks, you'll see off of that as the baseline. And then I'll do some year-over-year comparisons too. But there are some interesting undercurrents that we'll talk about in terms of what's driving these lines and the changes that we're seeing. You have employment, of course, changes there, drastic changes there that we've never seen before. We've got interest rates, dropping on several occasions. We have the stay-at-home orders from right around mid-March. Carriers issuing premium rebates because consumers are driving less, they're crashing less, and a decrease in kind of the traditional advertising that we typically see the industry doing is driving some of the activity here. And keep in mind, this is activity witnessed on comparison shopping sites, that part of the funnel, if you will, the shopping funnel. So let's look at auto and home first. So we see kind of over the time frame, it's roughly flat, but we saw some pretty dramatic increases starting around mid-May in terms of percent increases. Auto, up and down a little bit more dramatic shifts in home, which is typically about, when you look at auto and home together, home represents typically about 10% of that activity, slightly higher over this time frame, which is interesting. If we look at year over year, so as it became kind of flat to roughly down the last few weeks, or the first few weeks of May compared to the first week of March, if we look at that time frame, those 2 weeks year over year, it's still significant. This period is volume activity is significantly over the same time frame last year. So the first 2 weeks of May this year are about 50% higher than the same time frame 2019. So pretty increased volume overall. Let's look at life. So again, we saw, mid-March, we saw a big jump in shopping activity for life insurance, and that held pretty steady through the month of April. And then it's basically become, flat the last week or so. If you look at the kind of the first 2 weeks of May this year compared to the same time frame last year, the volume's about 3.5% less. So it's very comparable to the same time frame last year. And then we look at health, which is, everyone's probably wondering why Jamie didn't adjust the y-axis to where these other lines are, and it's because of health. Health, we saw significant changes, increases over this time frame, to the tune that if you compare this time frame against open enrollment, which is typically the highest watermark of the year, this is actually above open enrollment by a pretty healthy amount. And the first 2 weeks of May this year compared to the same time frame last year is roughly double the volume. So we've got some really interesting dynamics going on here with consumer behavior, and kind of setting the stage here for diving into some of the insights our experts have into perhaps what's driving some of this stuff and how insurance providers are responding and what to expect next. So I'm going to stop sharing my screen here. I think we're back. Good. So Eric, let's start with you. You've got a very unique position, as you mentioned in your introductory remarks, in terms of consumer activity you see, plus the kind of the bottom part of the funnel with respect to how that shopping activity ends up in terms of purchasing, whether it's carriers or agents, as you mentioned, including your own agency. So I'm curious what compelling things you're seeing on your end.
So it's a good question. I think it's important to keep the context in mind that there's a larger trend going on in insurance, this kind of broad wave moving towards digital. I saw a Capgemini report that came out this week, saying that the number of Gen X and older customers making insurance transactions using mobile or online applications had doubled between 2018 and 2020. And so I think, what we're looking at with COVID needs to be kind of, viewed in that context. But we're definitely seeing changes when we look year over year. I tend to take what we see from our search advertising as kind of our benchmark. That's where we tend to find the consumers with the highest intent. There's a direct response to a message there. And we're actually seeing, through the COVID crisis, we're seeing search impressions down about 10 to 20% on the property casualty side of things, down about the same in health insurance. But what we're seeing is that the consumers that are shopping may have higher intent. So we're seeing almost 10% year-over-year improvements in contact rates in our contact center for property casualty insurance. We're seeing 12% increases in contact rates for health insurance. about 10% for life insurance. So those consumers, there may be less of them searching, but they have higher intent to get insured. And so we're seeing improvements that ultimately, when you combine then with a big exit from other people in the market, other advertisers in the markets, and as a result, CPCs being down, we're seeing the volume that's out there is much more profitable and has higher intent. So that's interesting for us. It means that there's this kind of reallocation of dollars that's going on. And you combine that with, brick and mortar stores being shuttered or restricted in some way. And you have this kind of big shift that's happened in the insurance space towards online, which is exciting.
Great, and we'll dive into some more details behind those comments in a few minutes. Thanks so much. Brian, just curious, in talking with you over the past month or so, you've had an interesting experience starting around mid-March with respect to how your sales operations responded. Can you tell us that story? And it's a pretty fascinating one.
Yeah, thanks, Jamie. Yeah, it's been a bit of a ride. So really within our organization, within about a week's time, we shifted our entire call center sales operation, actually our entire call center operation, but specifically our sales center that I'm primarily connected with, which was roughly 30% work from home to entirely work from home. So pretty dramatic undertaking there. And really didn't miss a beat on that. So I think there was a lot of anxiety going into that of just the unknowns that an entirely virtual workforce may present. Many of those were unrealized, and a number of really good things coming out of that. But yeah, so for about a week's time period, we did have to scale back pretty dramatically to help support, but then jumped right back into things shortly after that as our folks were able to get up to speed very quickly. Additionally, our local agents overall are just getting, so our brick and mortar agents would be, they're getting very creative in how they procure sales operations or sales opportunities. And I think another thing to note is, as an organization, our entire shift of our operation model occurred without any reduction in workforce, which was great to see and kind of be a part of. Additionally, I would say we've really doubled down on our commitment to the performance marketing ecosystem, both short-term and long-term as well. So.
And we're not talking about a couple hundred people here. We're talking about thousands of people that you had to do this with.
Yeah, exactly. It was actually our entire global workforce went virtual. So you're talking in the neighborhood of 50,000 employees globally. In the US, operations in the tens of thousands, even just to support some of our sales, our virtual sales operations. So yeah, pretty dramatic undertaking across the board for our company.
Thank you very much. Appreciate that. That's an amazing story. Thanks for sharing it with us. Jose, what have you seen on the consumer front with respect to health insurance, the under 65 and the over 65 group, and how those kind of two groups have behaved over time?
On the, sorry, I'm having, can you guys hear me well? Hello?
We can hear you. Yep, we can hear you.
Sorry about that. So yeah, I mean, as Eric said, was a very interesting quarter, to say the least. Traffic, as you mentioned, was up about 40% from last year. but as Eric said, intent was, much higher. It felt to us that, consumers that were underinsured and or uninsured did, see the COVID situation as a threat and kind of like move consumers out and to get coverage. We, luckily for us, we built our products via, we built enrollment tools and, our demand or the sales that we're driving were up 100% year over year. So, consumers had higher intent, but they were also driven towards technology to fulfill, their needs, especially in health insurance. So, we definitely saw higher traffic, higher, but higher intent, higher conversions, and technology was definitely a key to fulfillment. And I think that going forward for us, the theme is going to be how do we get better at providing, simplifying the process for the consumer, and how do we get better at technology so that we could get better, especially from enrollment tools, not only in health insurance but Medicare and ancillary products. So I think the wake-up call here was how do we get better at providing a better consumer experience, and how do we get better at technology so that we could provide what the clients want on a seamless technology way. And this could be marrying a call assisted online flow or purely online, but definitely we have to rethink how the products are distributed and how they're
Thanks, Jose. Really appreciate it. Pretty dramatic numbers there, and I suspect that a lot of it's being driven by the changes in unemployment and as you had mentioned as we were preparing for this, about 10,000 people turn 65 every day. So that market only continues to grow. Niels, talking a little bit about life insurance, and you'd mentioned in your introductory remarks how life has lagged over over the years compared to some of the other lines of business. When you and I first met 4 or 5 years ago, that's when you were just starting iptiQ, that was kind of why you were getting into it, because there was a big opportunity in the marketplace, particularly in the middle market consumer segment. So I'm curious in terms of your comments around that and how the pandemic has influenced consumer behavior from your perspective with respect to shopping and purchasing and even retention.
Yeah, no, it's a very interesting times, and as you mentioned, we started 4 years ago upon this premise that life insurance penetration across the world and also in the United States is quite low. Latest stats indicate that 57% of US adults have life insurance, where a large portion of those consumers actually get that through work, which we all know is not sufficient in many times and definitely not portable. And so the big opportunity lies in how do we increase the access, how do we improve the process to make that buying experience much more simpler so that we can provide those solutions to people more. I think what we've tried to do, besides the challenge in life insurance of channels, whether you offer it digitally or through an agent, I think the other big influence in life insurance buying is the underwriting process. As many of you will know, when you buy a life insurance, you often have to go through medical, blood tests, and all kinds of intrusive steps. And so what we have tried to do from the start is to create a much more data-driven process where we leverage different data sources as part of that underwriting to come up with a instant issue type of approach. And I think what the COVID has done has made that demand for such solutions much more elevated. So I can say we don't sell direct to consumers. We sell through a B2B2C model. So we provide our products and our digital omnichannel platforms to distributors and other carriers that want to leverage those capabilities. And what we have seen, besides the increase in the demand from consumers, as was described throughout this session, is that our portion of that demand has increased, because compared to non-instant issue carriers, our offering was much more relevant in these times. And so you can imagine that nobody wanted to go out to go to a doctor or get a medical done. And so having a product solution that can provide that instant issue solution became very relevant. So we hope that this will continue to be an acceleration to that trend.
Great, thanks very much. And we'll circle back on some of the points you made there in a few minutes. Eric, curious about, so the local agents distributing, insurance in the communities across the United States still have, the largest market share in terms of sales and customers, and are a very important part of our ecosystem to provide, quotes and monetize, leads, clicks, and calls. Curious, from your perspective, have you seen any changes in your agent participation of the All Web Leads platform? And if so, what kind of challenges has that presented?
No, we have seen changes there. We've seen upticks there as well. I think really driven by two things. One, many insurance agents and agencies really still depend on traffic to their storefront to some extent or another. And, that drying up, I think they, started looking at, how can I continue to grow my business, without being able to depend on that. And so I think there was a refocusing towards digital channels. I think that then got paired with what many of their supporting carriers have done in response to the pandemic. So many of those carriers have reallocated budgets towards digital, away from other advertising channels. In some cases, their traditional brand advertising channels have vanished. So for example, sporting events. And so many of those companies have, reallocated budgets towards digital. They've kind of looked to their agents and said, this is a time to double down, and digital is a way of doing that. So we've definitely seen an expansion and interest from agents and agencies. The other side to that is, for many of those agents that hadn't been as invested in selling to consumers who have responded to an online workflow or an online comparison message, I think there's a learning curve associated with that. And so many of those agents are actually, for the first time, having to get good at selling to consumers that have come through that online comparison workflow. But we've definitely seen an uptick in interest from those agencies.
Very interesting, and I'm sure part of the message is, when an opportunity comes into your agency, don't aggressively sit around and wait for the phone to ring. Do the outreach.
And that's a new thing for many of them.
Mm-hmm. Yeah, cool. So Ryan, let's talk a little bit about Liberty Mutual's ideal customer profile, and have you seen any changes in that consumer segment's shopping and buying behavior?
Yeah. So on the Liberty Mutual side, and many may still think of Liberty Mutual in this capacity, but just a few years ago, our product was very much tailored towards that preferred consumer. So in other words, the higher end of the standard segment of consumers. In the last 18 months, we've made an intentional shift in our product with the goal of becoming more of a mass market insurer. As such, our lens has been more looking at that standard consumer. And at the onset of the pandemic, we did have a reduction in shopping across the board. And I'd estimate that was somewhere in probably the 25 to 30% range there, which we did see persist for roughly a month. That since has returned to pre-pandemic levels. And all in all, it was encouraging to really see shopping normalize in a relatively efficient manner. To Eric's point earlier on what we're seeing, we are seeing intent to buy being very strong, which really speaks to a less, I would call it just curious shopper, and likely a more focused approach to insurance shopping on the part of the consumers that we're targeting.
Yeah, that's very interesting. I appreciate that, Ryan, that color on that. Traditionally, from a consumer shopping perspective, when you look at the segmentation of what's going on across the auto/home population, the online shopping population tends to skew a little bit non-standard, just because the preferred consumer doesn't shop as that frequently. I suspect that during these times, some of the growth we've seen has been because the normally shy preferred auto home consumer has actually ventured out into comparison shopping land to look at their options. So
yeah,
just a hypothesis.
I would agree with. Yeah, and I'd actually agree with that too, Jamie. Just to kind of echo your sentiments there, we did have some concerns that you were just going to see a flood of, I'll call it lower quality, into the marketplace, and I don't think that was actually the end result of this. It felt like it was, the trends that we saw were more across the board, and really kind of spoke to a more just broader market, a broader consumer approach than even just different segments. Certainly, not trying to overgeneralize, because I'm sure there were nuances there within specific segments, but yeah, it was not as concerning as we may have thought or projected at the onset, as an industry, that is.
Great, thank you, Jose. And Eric, we'll get to the question one of the the audience members had on the cost per acquisition. So feel free to answer it as I ask you additional questions. For Jose, how have your operations responded the past few months? And can you talk a little bit about productivity and what the plan is from an operations and sales perspective for the remainder of the year?
So, I mean, we've been kind of like a virtual company from the outset. We have multiple offices and people already working from home. So I think that the shift towards forceful going remotely was smooth for operation. We started like I said before, small contact center in Indianapolis, and we were not prepared, let's say, to go full remote. But just like Ryan said, I think we're able to do that very quickly as well. As far as productivity, I think we're very proud of our team. I think everybody just kind of like stay together, and everybody's working from home. Obviously we have more calls during the day. I think that I wake up, turn on Zoom, and turn it off at night. But have to have more touch points with a group, and we introduced the virtual happy hour and things like that. But definitely, I mean, I think that changes in your workday by going remote, but the company is still running efficient. I think productivity has gone up. I mean, we've full of work. It hasn't stopped, and I imagine for everybody else. But I think going forward, I think again we're pushed to think more clearly about a more robust virtual strategy. And I think now that I'm back in the office, and we're going to give people the option of starting to get back to work, but we are going to have more of like a dual strategy going forward, where hey, you have a team that goes to work, but we'll always have like a virtual team going forward, or we'll be even more prepared to go virtual in case there is a second wave. But I think whether there is back to work or no, we will have a all virtual team going forward. At least some of them, yeah.
Thank you very much. In terms of cost per acquisition, have you seen kind of any big shifts there in terms of what you're bringing in the front door?
Yes, I think just like us, I think all the other players saw a huge spike in traffic, so they saw it as an opportunity to capitalize on the traffic. We did the same, so we had to adjust our metrics, down, basically increase our cost per sale so that we could become more competitive and be able to serve more traffic. But I think there was an influx of, and like Eric said, call centers and individual agents, they needed to keep the phones ringing, and basically demand followed the. So I think there was that definitely translated into an increase in cost per acquisition, but it's still profitable levels, and I think compared to the higher intent of the consumer, it was a positive event across the board.
Just to jump
Great,
in,
yeah, go ahead, Eric.
on the in answer to that question on the property casualty side, I mentioned we've seen search impressions down about 10 to 20%, but we've seen with that a click-through rate improvement of about 2x. And so that's really, a big part of what's rebalanced our cost per clicks there, down significantly, and really kind of the indicator that we look at regarding intent. And so, fewer people shopping or looking for property casualty insurance, but, and again, reinforcing what Ryan said earlier, those that are looking have, much higher intent to actually get something done, in preparation for, maybe buttoning things up, as the lockdown occurred, or, whatever was driving that, changes in employment, changes in the wider world. There's certainly a lot of things that could drive higher intent, but from a financial standpoint, that increased intent has more than made up for, the reduction that we've seen in impression volume.
Great, thanks. Great question from the audience. Keep it coming. So Niels, when you and I conducted a panel session at InsurTech Connect last year, you and I spoke about kind of when you started at IPTQ and pretty much through that time frame, it was during a good economics times, employment's going down, just really, kind of a good atmosphere, if you will, to build a new business. And at the time we talked, well, what will happen when, the economic times turn and we hit a recession? Well, here we are. So wondering if you could comment on how IPTQ has positioned itself to continue to grow profitably in a recessionary period.
Yeah, so I think, the default that people tend to worry about with a recession is that it will significantly impact life insurance sales or the persistency of those. I think clearly, life insurance continues to be a product that is not on top of people's priority list, and so is one of those products that might be dropped I think it becomes even more relevant in these times to offer value for money propositions, right? So as I mentioned before, we spoke about the sort of intrusiveness of some of the traditional buying processes. The answer from some of the industry player has been to come up with very simple processes, but at very high premiums. And so costs of those, some of those products have been very elevated. And I think that's where we've seen in good times, let alone in more challenged times, quite high lapse rates occurring and cancellation. So I think what we are trying to do is not to take a shortcut as such by raising the prices in return for a simple process, but how do you keep those rates as competitive as possible, close to that competitiveness in rates that have been offered. And I think so for us, that's even more important now than ever before. And I think the second thing I would highlight is you just need to have your operations, your service levels in order, right? You don't want to give any consumer in any point in the experience or in the services the reason to doubt the quality and the value of the product they have. And that's not only the product, the payout at the end in the inevitable, but also the experience they have throughout. So service and price become even more important. And that's what we're working on really hard at iptiQ to differentiate ourselves there.
Thanks very much. I appreciate that. And the challenges both on the consumer side and on kind of the economics of the life insurance side and times where interest rates are dropping, which have more of an impact on life insurance economics than some of the other lines of business. So Ryan, let's jump to you real quick. From a brand's perspective, what is your ask, if you will, of the generators of leads, clicks, and calls for the remainder of 2020? You mentioned you're doubling down, if you will, and that's likely to continue. What's your ask of that ecosystem, if you will?
Yeah, Jamie, thanks. Great question. So I think my ask, I mentioned earlier, one of the pieces that I'm most excited about is the innovation that'll be spawned from us all kind of taking this step back and looking at, where are we doing things right? Where are there opportunities that exist? And so I would reemphasize that, but I think my ask, my overarching ask, is more, at the onset of the pandemic, there were some concerns on the brand side, and we did witness some, I would say, lower intent marketing sneaking into some of our programs. And to Eric's point that he's made a couple of times here, that really was unnecessary. So while we weren't necessarily surprised at that, it was a bit disappointing, because in the consumer's mind, that's oftentimes attributed to the brand and certainly degrades the legitimacy of the ecosystem to those consumers, and can really have kind of broader impact. So I guess my ask is pretty simple, to just really resist that urge for a quick win and really play the long game, as that's when we all win. I look at things very simplistically, as we do things right by the consumer, everything is going to work out well.
Yeah, that's great stuff and very important. Eric, in terms of kind of piggybacking off of that, what do you see All Web's working on to kind of impact or improve the consumer experience going forward?
I would say, it's something that we've been working on already and will continue to work on going forward. So many of our customers depend on our contact center to get the consumer on the phone and qualify what they're interested in, and maybe even qualify what's the right product for them prior to connecting them with a customer contact center. And one of the things that we've been working on from the standpoint of consumer experience is improving the way that those calls work, making them much much more naturalistic. As you can imagine, we cover all types of insurance, and we have a virtual contact center that we've built here in Texas that employs very, very driven, very, very smart people, but none of them are insurance experts. And so what our system has to do is help to drive a conversation that effectively susses out the consumer's interest and qualification and applicability, using people that aren't insurance experts. And so we've been paying a lot of attention to how those conversations work, what the flow is, and the scripting that we wind up feeding to those contact center agents, and trying to make that work better for the consumer, work better for our customers, and make it I would say a much less rigid conversation. It's something that we've been calling guided discovery. And so we want those contact center agents to be working with the consumer through a discovery process, again, without necessarily having any expertise in the products that are being discussed. So that's something that we're really proud of, how well it's worked and how well it continues to work. But we know we've got a lot of additional work to do there.
Great, appreciate that. Yeah, making sure that consumer expectations are set, they're qualified, and handing them off to the best option for them based on their situation. That's great stuff. So Niels, we got a minute each left. So Niels, we can either talk, your choice. You could either answer the final question, which you have, or you could address one of the questions from the chat, or something we didn't cover that you'd like to cover in the last minute.
Yeah, no, I'll try to do both in 1 minute. So, so I think this has really been unprecedented times. So it creates an opportunity for life insurance, as I said at the beginning, to really catch up. Not necessarily to go all digital. I think for life insurance, at the moment, the starting point of that journey is already online. We see over 50% of shoppers starting that journey online. And I think we continue to see slight increases in the percentage that close that sale online, self-serve, but the majority, over 75%, needs that agent assisted, as it is a complicated product that needs some support. So I don't think COVID is going to change that. I think what is going to help is that you need to have products, as I mentioned, that are affordable, where the process is much easier, and where you have that flexibility of channels wherever the consumer wants to buy or engage, that is available to them, and we'll continue to provide those solutions, enhance our solutions, and help the marketplace achieve that.
Great, thank you, and I believe that'll happen. Every time we talk, I hear what you're planning to do, and then we always circle back a few months or a year later, and sure enough, you've accomplished that. So good stuff. Jose, lasting impacts that you see from the pandemic in the last minute we have, from your perspective.
I'm going to second what Ryan focus on the long term. I think COVID is going to force us to, again, think about better consumer experience, think about better distribution, rely more on technology and data science, and provide a better product to the consumer. So long-term focus, I think insurance is a great industry. We're kind of like counter-cyclical. We do provide a service that is important for the consumer. So we just got to get better at it. And I think with or without COVID, like Ryan said, focus on the long term. And now we're actually getting a nice big push from COVID to get better by providing better technology, better service to our end consumers. So long-term thinking.
Ryan.
Yeah, so I think the main lesson that we are taking away from this, and I hope is being taken away from it, is more of the reacting in fear and panic will have unintended consequences. I think about what we have seen in kind of the retail marketplace, and some just some crazy reactions there. And I distill that down into how to do things right. So just again, kind of that willingness to take a step back, gut check things, make sure that we're not overreacting, that we are actually really making decisions that are just the right decisions, not just short term, but certainly those decisions that are going to put us all in a position for success long term. So I'm hopeful that that'll be there will be a number of really good, just general gut checks on where we should be focusing our time and efforts.
Thank you. Eric, close us out, will you? And before you do that, I want to thank everybody for joining this morning, and for all the participants. Really appreciate it. It's been a great experience, and as always, love to hear your insights. So Eric, you want to close it out in the last 30 seconds or a minute if Michael will allow?
So, I think, I'll go back to where I started. I think the lasting impact of this is it's accelerating the adoption of a new set of tools and techniques that was already happening, but I think this is accelerating it, and that's exciting for us. It's exciting for the people that sell insurance, because those tools and techniques for collaborating, for selling to consumers, for reaching consumers, I think create a whole new set of opportunities, and I think we're going to see a lot of that happen more quickly because of this.
Awesome, Eric. Thanks, Jamie, and thanks everyone for taking the time to share this information. I would say encourage you, if there's some questions that are within the app, if you guys want to go in there, maybe you can follow up and answer them within the app too, if you'd like. Otherwise, those that didn't get your questions asked, you can reach out to the speakers individually as well. But thank you. It was really, really great session. Tons of great information. Thank you for participating. And we'll see you hopefully on the other side of this COVID situation. Thanks all.